LSC Communications Summary of Facts and Possible Impacts due to the PRC 10-year rate-making final rule was recorded on January 24, 2021. Any later actions of the USPS Board of Governors or the DC Circuit Court responses to requests of stay or later judgments cannot be precisely forecasted as of this date. There are multiple factors that can impact the likelihood and range of a possible second increase in 2021. Those factors may occur after the date of this recording and may not be included in this video. For the most current updates to status of any additional changes to rates, contact your LSC rep. We do know that the new regulation requires 90 days notice be provided to the industry of any new rate changes. Upon any official announcement of such rate changes, the LSC postal blog will be updated with that information. The LSC Postal Operations Team would like to take this opportunity and bring to your attention the potential impacts on your 2021 postage spend that we see may be possible as a result of the completion of the PRC 10-year rate-making review. Our agenda at a high level will cover PIEA, specifically the mandate within the law concerning the 10-year review directive. As the review has been completed, we will cover what is included in the rule and what it could mean to your postage budget. And finally, we can discuss what are the next steps in this process and how we together may work to address them. I've included our team's contact information for any follow-up questions. We're at postaloperations@lsccom.com. I encourage you to subscribe to our blog on the LSC Communications website. Any news stories or updates we publish on postal and the paper market will be pushed to you with an email alert, as well as insights including company and industry news. Our site is www.lsccom.com, and the blog can be accessed through the menu on the top right of our homepage. The Postal Accountability Enhancement Act, or as I referenced, the PIEA, was made law in 2006. It reorganized the Postal Rate Commission to the current Postal Regulatory Commission, and it compelled the USPS to pay in advance for the health and retirement benefits of all of its employees for at least 50 years. This is well beyond any pre-funding being done today by any public company or federal agency. The law also stipulated that the price of postage could not increase faster than the rate of inflation. It set the Consumer Price Index as the tool for measurement, giving the industry predictability in pricing. Another part of the law required that the PRC in 10 years' time review the existing rate-making process and determine if it is meeting the objectives of the law. That process began in December of 2016. With the publishing of a proposed rule in 2017, it became open to public comment. Based on the comments received, the Commission issued a revised notice of proposed rulemaking in 2019, again accepting public comments and taking back to review. On November 30th of 2020, the PRC issued a final rule finding that the rate-making system was not achieving the statutory objectives. Therefore, there was a need for modification to the rate-making system. The USPS filed the final rule in the Federal Register on December 15th, and it became effective on January 14th of 2021. The final rule, while keeping the CPI process in place, gave the USPS additional rate authority, effectively nullifying a rate cap and making future increases impossible to plan for. The new authority is provided to the USPS for each of the next 5 years. After 5 years, the PRC has the option to extend it if they believe it's still necessary. Otherwise, rate making would return to CPI only. Future rate increases will be allowed at CPI plus density plus retirement plus 2% for non-compensatory products. The Postal Service's 2020 fiscal year ended on September 30th. Within 90 days of then, the USPS was required to present to the PRC a notice of calculations of future rate authority. This document uses data the USPS collected for the annual compliance report, such as cost, revenue, service, and volume, to come to the numbers they will use for the density and retirement factors. The USPS was also required to, by the end of the year, report if they plan to use any of the additional rate authority. Within that filing, the Postal Service did make known that they intend to utilize the additional pricing flexibility granted by the Commission, although precise decisions regarding the use of the new authorities and in what amounts will be made by the Board of Governors. The next step is that the PRC has 90 days to review the filings and return to the USPS an annual compliance determination report. They will then confirm if they agree with the figures the USPS came to or remand it for review. This brings us to the end of March or early April 2021. Next, the Board of Governors will meet to determine if they wish to take another rate increase, and if so, in what amount. The law now requires USPS provide industry 90 days notice for any rate increases. This brings us to July or August of 2021. The next 5 years' future rate increases may include CPI, which is a measure to track the rate of inflation. As the CPI will already have been taken in January of 2021, any additional CPI for summer would be a low number of less than 0.5% to perhaps up to 1%. It is not known if the USPS would also take this. The CPI varies annually and is easy to monitor monthly on the PRC website, allowing for predictable budgeting. For the January 2021 increase, the figure was 1.456%. The new factors available to the Postal Service are the density, retirement, and non-compensatory surcharge. The density rate authority is equal to the uncontrollable density driver portion of increases to the average cost per piece, using factors of mail decline and increases to delivery points. The factors calculated for 2021 is 4.5%. This number will vary annually. This figure is much higher than earlier projections within former proposed rules. Because 2020 saw significant mail volume declines due to COVID, these losses contributed to a higher density figure. The USPS is permitted to use part of, all of, or bank 100% of the authority for future use. The retirement payments additional rate authority, if used, is for the Postal Service to meet its required retirement obligation payment. The revenue raised must be remitted to the Office of Personnel Management. The figure for 2021 is 1.062. It will vary annually, but not by large swings. The USPS cannot bank this amount. They must apply it or lose it. The non-compensatory classes and product surcharge is applied to products when the revenue they bring in does not cover their attributable costs. These are often called underwater products. They include in-county and outside county periodicals, marketing mail flats and marketing mail parcels, marketing mail carrier out, media and library mail, and bound printed matter parcels. The figure is static at 2% annually. The USPS may bank this if they do not initiate a rate increase. But if they raise rates, they must raise these products an additional 2%. The traditional annual rate increase we normally expect each year became effective on January 24th, 2021. The overall increase was 1.509%. This included the CPI of 1.456%, plus the unused banked authority of 0.053%. Based on the rate-making rules, each class must stay within the CPI, so some products received higher and some lower. And at a product level, some pre-sort cells also saw higher or lower increases. The USPS added 2% to the marketing mail flats and marketing mail carrier route flats, bringing their increase to 3.5%. Because this was over the CPI amount, the USPS balanced that by giving a lower than CPI increase to other marketing mail products, such as letters. Periodicals received an average increase of 1.45%. Larger publications may have seen an increase in the range of 0.7 to 1.2%, while smaller circulation publications may see above average increases due to less pre-sorting. Participation in co-mail helps to reduce that impact. Due to the PRC rule becoming final, there is the possibility of a second rate increase in 2021. Some categories of mail could see another rate increase in the summer of up to 7.56%, possibly up to 8.5% if the USPS also uses a CPI factor. These figures are worst case scenario. We do not know how much or if any the USPS will use. Marketing mail letters, high density and saturation flats, along with bound printed matter flats, may see an increase up to 5.5% due to the density and retirement factors, while the bound printed matter parcels, periodicals, marketing mail, flats, and carrier route may see that additional 2% due to the non-compensatory surcharge. The order is final and cannot be repealed except by a court of law or act of Congress. That doesn't mean there isn't some opportunity to stall its impact or have a court prevent future uses of the additional authority. Several associations have filed objections in the DC Circuit Court under the grounds that they believe the Commission has exceeded its statutory authority under PAEA. At the same time, the USPS has filed notice that they will be issuing a suit as well, as they did not get everything they wanted from the rule. Traditionally, the courts do side with the expert regulators, which are the PRC. These cases tend to take up to or more than 1 year to receive a judgment. When legal teams on the case were asked for our chances of being successful based on our objections, they estimated them at less than 50%. The briefs will be submitted to the courts by June, but the courts close for the summer in June, so we may not get a judgment before the Postal Service has an opportunity to put in a second rate increase. Without a stay, the USPS will be allowed to use the additional rate authority while the case is still being determined. Because of that, industry associations had requested an order of stay from the PRC, asking that the USPS not be allowed to use the additional rate authority until a court hears the objections and issues a judgment. As expected, the PRC denied this request on January 19th. Industry will now file a request for a stay from the Court of Appeals. We will continue to lobby Congress for meaningful postal legislation. This could also help eliminate the need for the retirement surcharge. Our best prospect is if the USPS does not use all of the additional rate authority they've been granted. We're strongly petitioning them to hold off on any additional rate changes until 2022. Because of the additional revenue from the large influx of packages, they are in the black. Also, in the CARES Act, the USPS was provided COVID aid of $10 billion of borrowing authority. And in the most recent COVID relief bill, that borrowing authority was converted to a grant. The USPS does have to present a strategic plan and show how they will use these funds due to losses of COVID, but essentially it is a $10 billion grant free and clear. We hope that these factors are enough to help sway the USPS to use good business sense and not impose a second rate increase, or to temper it and not use 100% of the available amount. LSC holds board level positions in 2 of the major associations involved in the court filing, We have active participation with the others. We're engaged through the efforts of the PRC and the courts through our association partnerships. We hold a board seat with the American Catalog Mailers Association, ACMA, which is the primary advocate for the catalog industry, as well as a board seat with Postcom, the Association for Postal Commerce. They support all businesses and organizations that use or support the user of mail as a medium for business communication and commerce. We are also members with the Association of Magazine Media. They are the primary national trade association for the consumer magazine media industry. Our LSC corporate team is in communication with the legislative offices that represent our plants. We encourage our customers to contact their senators and representatives, letting them know the possible effect to their voting employee base that this new rule will have based on increased postage costs to your business. I hope that you are currently engaged yourself with an association that represents your interests. We'd be happy to help guide you with that and provide introductions. We are bringing you this information as we cannot, in any good confidence, commit if the request for stay will be successful in preventing an increase before the courts rule. Nor can we rely on the USPS to use good business sense and not use the full available authority given to them. This is a cautionary communication to help you in preparing for that possibility. We can, though, through our postage optimization and co-mail pools, help in mitigating or reducing the impact of future rate increases. The USPS continues to incent the greatest level of pre-sort within categories with lower increases. Inclusion in our Tuesday pools provide the greatest opportunity to achieve the finest pre-sort level, including high density and saturation rates, which will not be subject to the additional 2% surcharge that other flats will receive. We thank you for your time and attention on this very important topic. Again, in conclusion, LSC Communication Summary of Facts and Possible Impacts due to the PRC 10-year rate-making final rule was recorded on January 24, 2021. Any later actions of the USPS Board of Governors or the DC Circuit Court responses to request of stay or later judgments cannot be precisely forecasted as of this date. There are multiple factors that may impact the likelihood and range of a possible second rate increase in 2021. Those factors may occur after the date of this recording and may not be included in this video. For the most current updates to the status of any additional changes to rates, contact your LSC rep. We do know that the regulation now requires a 90-day notice be provided to the industry of any new rate changes. Upon any official announcement of such rate changes, the LSC postal blog will be updated with that information.